Today, we are going to be talking about one of the hottest altcoins in the market right now, which is leading one of crypto's strongest narratives, Stacks. I'm going to talk about the reason why this narrative is so strong and what could potentially come next for Stacks and the rest of the Bitcoin ecosystem. But first, let's run through what Stacks is and what its token STX actually does. My name is 𝗲𝗍𝗄𝗧, crypto analyst and researcher dedicated to helping you succeed in the crypto market. If you enjoyed these videos, make sure to hit the subscribe button and click the post notification bell so you never miss a single upload. Now, let's talk about Stacks. Think of Stacks as a layer 2 blockchain that aims to bring smart contracts to the Bitcoin network. Visualize Bitcoin as a pyramid. At the base, you have the Bitcoin network with its proof of work consensus mechanism. On top of it comes Stacks, an L2 scaling solution which leverages the security of the Bitcoin network to enable smart contracts. This allows Web3 to exist on the Bitcoin network, such as DeFi, NFTs, and dApps. Recently, Bitcoin ordinals, aka BRC20, a new token standard on the Bitcoin network, has gained in popularity. This has led to increased demand for infrastructure that can facilitate more DeFi use cases like Stacks. As Bitcoin is the largest cryptocurrency, it's home to an enormous base of capital and to users that are already familiar with crypto principles, yet there is only a relatively small economy built on Bitcoin today. However, the base L1 Bitcoin layer was not designed to optimize for composability, and therefore it is bulky and inefficient to use for more complex applications. Building on an L2 and securing the value on an L1 is a more sensible design for most applications and is exactly what Stacks does. There are three main L2s on Bitcoin: Lightning, RSK, and of course, Stacks. Now each L2 is complementary and all have different goals. But of the three, Stacks is the furthest along in terms of developing an ecosystem for more traditional crypto applications like NFTs, DeFi, name services, etc. It has the most advanced NFT ecosystem. The .BTC naming service lives on Stacks, and further DeFi applications will be enabled with their upgrade later on this year. We'll get into that at the end of the video. Now, Stacks is the only one of the three L2 solutions for Bitcoin with a token. So from an investment perspective, I think this is the obvious outlier. What separates Stacks from other layer 2s is its consensus mechanism, known as proof of transfer or POX, which allows miners to stake Bitcoin in order to secure the Stacks network and receive STX tokens as rewards. The STX token serves multiple purposes within the ecosystem. Firstly, it's used to pay for transaction fees on the Stacks network. Additionally, STX tokens can be utilized to mint SBTC, a token pegged to Bitcoin, which powers decentralized applications on the Stacks platform. 𝗕𝗆𝗄𝗆 is a crypto analyst who wrote an analysis on why the STX token has strong fundamentals underpinning its value. Let me read directly from his article to help you understand the value prop of the STX token even better. Unlike many tokens, the STX token has real value accrual. Stacks runs on a proof of transfer system that works somewhat similarly to proof of work. Miners validate Stacks transactions, but rather than receiving emissions with no cost, they must bid for Stacks blocks in order to receive the STX rewards for each block. The currency they use to bid is Bitcoin, and this Bitcoin goes to Stack stakers who commit their Stacks to the network. This creates a system where miners do the work of validating transactions, but do not keep all the rewards. Some instead get distributed to STX holders through the Bitcoin bids from the miners. This creates a real Bitcoin yield for Stack stakers, currently 7%, that importantly is correlated with activity on the network. As activity grows and the blocks are worth more, the BTC bids from the miners will also increase, with it the real yield that accrues to STX stakers. This sets an attractive foundation, but what's most attractive about the STX investment case is the asymmetry of the risk reward. Super interesting stuff. By the way, if you're interested in Bitcoin mining specifically, but don't want the hassle of running your own rig at home, then our show partner, Bluewheel Mining, could be a good solution. By holding an NFT, you receive a profit share of the Bitcoin mined via their 200 ASIC miners. You'll start receiving mining profits in the form of W Bitcoin within 24 hours of holding an NFT after the miners deploy. The NFT launch is happening on the 15th of July, so if you're interested in that, click the link below, bluewheelmining.com, to learn more and follow them on Twitter for updates. Okay, now on with the rest of the show. Now you understand what Stacks is and what the token does. But it's time to talk about some of the recent developments in the crypto space which have bolstered the case for Stacks. In recent weeks, the SEC has been going on a regulatory rampage, suing the likes of Binance and Coinbase and naming 19 altcoins as securities in the process. Cardano, Matic, and Solana, with 3 of the tokens mentioned in the lawsuits, and were subsequently delisted off Robinhood as they were deemed securities. Since then, there has been a clear contrast in the price action of tokens considered securities and those considered non-securities. For example, BTC, BCH, and LTC have experienced strong gains as they received listings on the new EDX exchange, a regulated crypto exchange backed by Fidelity, Citadel, and Schwab. But what about STX? Well, BlockStacks, the issuer behind the STX token, actually had their token sale fully qualified by the SEC. It was the first SEC qualified offering in US history. In fact, if you go onto the SEC's website, you can view an info sheet which details the approval. Due to this, we can affirm that it's likely that the STX token itself is probably a non-security, which is a very important distinction given the current regulatory environment. I also want to discuss the Bitcoin narrative in general. Recently, BlackRock filed for a Bitcoin ETF, which, if approved, is a huge catalyst for institutional and retail adoption of Bitcoin. Now, as a result, Bitcoin dominance has been exploding. And if Bitcoin continues to gain steam, well, then what tokens are the main beneficiaries? Well, in my opinion, the Bitcoin ecosystem. But since there's not many tokens currently available to invest within this niche, Stacks is essentially a proxy bet to trade the Bitcoin narrative on a higher beta to BTC itself. So what's to come for Stacks throughout the rest of the year? Well, in Q4 this year, there's a major upgrade called the Nakamoto upgrade that's set to take place. It is expected to enable the Stacks network to produce blocks every 5 seconds as opposed to 1 every 10 minutes, which is currently the limitation of the Bitcoin network. This will drastically improve the speed and scalability of the Stacks network. As their official article states, the Nakamoto release adds important capabilities that enhance the power of Stacks as a Bitcoin layer. In addition to the trustless two-way peg, SBTC, this would enable transactions secured by Bitcoin finality and faster Stacks transactions between Bitcoin blocks. By the way, if you're interested in purchasing or trading STX, there's a link in the description below to OKX, a trusted partner of the channel. If you sign up for a new account using the link, there's a $10,000 mystery box available for new users, meaning you get a chance at winning a 10K prize. Now, you may win nothing, $5, $10, $100, etc. It's completely random what you'll get from opening it, but if you want to have some fun, then that promo is available in the description below. So we've talked about some of Stacks' positives, but I always think it's important to remain objective when discussing projects. So now let's discuss some of the negatives surrounding Stacks. 1, it's still in development, and tech-wise, it's nowhere near as impressive as some of the other layer 1 solutions on the market. 2, as it's being speculated upon as the primary proxy bet for the Bitcoin narrative, will newly launched products potentially threaten its demand? That's definitely a question mark, the validity of its moat long term. 3, unlike all altcoins, strong fundamentals don't necessarily need to increases in token price. It still relies on favorable market conditions in order to appreciate in price, especially favorable conditions for Bitcoin itself. But of course, this video isn't in any way, shape, or form financial advice. It is purely created for entertainment purposes. So to conclude, although Stacks is still in development, it does have significant potential to revolutionize the landscape of smart contract deployment on Bitcoin. Let me know what you think of Stacks in the comments below. And also let me know which project you'd like me to cover next. I'll be taking your suggestions from the comments. I'll see you in the next deep dive, and until then, peace out.